My name is Julius Ihovire, OOM, and I represent Owan Federal Constituency, and I'm very happily from the new Edo State. And I'm here to read the address of Mr. Speaker. But let me begin by acknowledging the presence of the chairman of the Finance Committee that just addressed you, and my very dear colleagues, including our immediate past Deputy Speaker, and of course, my predecessor in office as leader of the House. Let me also acknowledge the stakeholders that are here. I see Mr. Oyedele there. Anytime I see him, I feel sorry for him because I don't know how he managed to still look this good. I see the CGA Customs. Thank you very much for being here. Many years ago, when he was my student, he didn't have this much power. I had the power then. But now he's a very powerful man with, the highest decorations in the Customs Service. Congratulations to you. And many others that are here, I welcome all of you. Let me proceed to read the Speaker's address as written. Distinguished colleagues and invited guests, I have the pleasure to welcome you to this public hearing on the tax reform bills before the House of Representatives. We have invited key stakeholders, including MDAs, business leaders, tax experts and administrators, representatives from the private sector and civil society organizations to take advantage of this platform to provide useful contributions that will guide the House in the consideration and passage of the tax bills. I would like to thank the stakeholders and all Nigerians that are here for their enthusiastic response. By being here, you have demonstrated unquenchable desire and patriotic commitment towards having a tax system that best serves the greater interest of Nigerians. Let me thank the Policy and Legal Advocacy Center PLAC for providing support for this program. This 10th House recognizes the critical importance of the tax reform bills, the anxiety among Nigerians and the desire of the government to revamp our economy through an improved tax system, and resolve to ensure a thorough legislative process that is open, transparent, and inclusive. It is for this reason that we created a special committee chaired by Honorable James Faleke to oversee the legislative process. This committee includes members of the House Committee on Finance and co-opted members from the 36 states of the Federation and the Federal Capital Territory. This arrangement is to ensure inclusive representation and broad-based deliberation on the proposed bills. I thank the Honorable Chairman and members of the Special Committee on the Tax Reform Bills for the good work done so far, and urge the committee to diligently drive the process to its logical conclusion. The tax reform bills under consideration include the Nigeria Tax Bill, the Nigeria Tax Administration Bill, the Nigeria Revenue Service Establishment Bill, and the Joint Revenue Board Establishment Bill. They represent critical proposals from the executive to expand Nigeria's tax base, improve compliance, and establish sustainable revenue streams for our nation's development. As you are all aware, the tax reform bills have generated widespread debate in the media, public domain, and even in private discussions, all reflecting their importance. It should be noted, however, that these debates are healthy and necessary for consolidating our democratic practice and culture. Therefore, The purpose of this public hearing is to foster robust discussions and harvest recommendations by providing stakeholders the opportunity to make their inputs. Importantly, this public hearing will help us identify areas requiring amendment, clarification, and improvement, while also considering the compatibility of these bills with the 1999 Constitution as amended and other extant laws. We have therefore set aside 3 days for the public hearing to enable as many stakeholders as possible to air their views and make their recommendations. Honorable colleagues, ladies and gentlemen, the journey to this public hearing has been characterized by a number of critical activities in the legislative process of lawmaking. First, the House held a pre-legislative hearing on the proposed tax reform bills, on November 18, 2024. This gave us the opportunity to interact with the proponents of the bills and other tax experts and administrators. Through the interaction, the honorable members gained a comprehensive understanding of the bills and appreciated their provisions, enabling them to identify contentious and controversial areas. Subsequently, further consultations were made with members interfacing with their constituents, including state governors, all in a bid to build consensus and produce bills that align with the interests of the executive, the legislature, subnational governments, and Nigerians. The bills were then considered on the floor of the House and unanimously passed for second reading. Right from the onset of the 10th House, we identified tax reform as a key priority area in our legislative agenda because of the central role of tax in achieving sustainable economic growth and development. In every modern state, taxes are the bedrock of public revenue, providing the resources required to deliver education, healthcare, infrastructure, and security. Yet, Nigeria, despite being Africa's largest economy, struggles with a tax to GDP ratio of just 6%, which is far below the global average and the World Bank's minimum benchmark of 15% for sustainable development. This is a challenge we must address if we are to reduce our reliance on debt financing and ensure fiscal stability and secure our future as a nation. As we interact today, let me reiterate that the proposed tax reform bills aim to diversify our revenue base, promote equity, and foster an enabling environment for investment and innovation. The President Bola Ahmed Tinubu administration is deliberate in the administration's tax reform programs, ostensibly to improve Nigeria's tax to GDP ratio by streamlining and broadening the tax base. However, as representatives of the people, I have continued to hold the view that we must approach these reforms thoughtfully, understanding their potential implications for every segment of society. Taxes should be fair, transparent, and justifiable, balancing the need for public revenue with the burdens they impose on individuals and businesses. The House will, therefore, scrutinize these bills thoroughly, ensuring they align with the best interests of our constituents and the nation at large. We owe this duty to Nigerians, and as the People's House, we must always accommodate the people's interests. Honorable colleagues, ladies and gentlemen, I urge you to approach this public hearing with an open but critical mind. I urge stakeholders to feel free to make insightful contributions and raise any concerns agitating their minds on these proposed bills. Together, let us seize this opportunity to bring forth a tax system that serves the best interests of all Nigerians. Let me assure the stakeholders present here and all Nigerians that the House will give deserved attention to every contribution while working assiduously to ensure the passage of the bills. As I conclude, let me use this opportunity to thank Nigerians for their support, understanding, and patience. There will be light at the end of the tunnel. In fact, there is light at the end of the tunnel. With these few remarks, it is now my pleasure to formally declare this public hearing open. We look forward to receiving the full report at plenary as soon as possible. Thank you, and may God continue to bless the Federal Republic of Nigeria. These are the words of Right Honorable Tajuddin Abbas, Speaker, House of Reps. Thank you very much for listening.
Is to come over here because the public address system are not really functioning on the table. No, come over here, sir. Taxation in Nigeria. James Abiodun.
Who has seated, the Deputy Chairman, of course, my able, honorable colleagues of this committee. I welcome you all, our invited guests, gentlemen of the press, ladies and gentlemen. You are all welcome to this public hearing on the tax reform bill. My speech goes as follows. For many decades, our tax laws have remained largely unchanged. While these laws served their purpose at the time they were enacted, the economic and business landscape has evolved significantly over time. Some provisions in our existing tax laws are now outdated and no longer in tune with current economic realities. The tax laws that will be repealed by the tax reform bills when enacted are as follows. The Companies Income Tax Act 1979, the Value Added Tax Act enacted in 1993, the Personal Income Tax Act enacted also in 1993, the Income Tax Authorized Communications Act enacted in 1966, Capital Gain Tax enacted in 1967, Stamp Duties Act 1979, Casino Act 1965, Deep Offshore and Inland Basin Act in 1999, Industrial Development Income Tax Relief Act in 1971, Petroleum Profit Tax Act in 1959, that was the year I was born, Venture Capital Incentives Act in 1993. Most of these acts have been amended severally over the years. Since 2019, successful finance acts have been introduced to provide quick fix amendment to some of these archaic provisions. However, these amendments have been piecemeal and have not comprehensively addressed all the issues within our tax system. Recognizing the urgency of a more holistic reform, the President inaugurated the Fiscal Policy and Tax Reform Committee with a clear mandate to overhaul and simplify the tax system. This committee worked assiduously to produce these tax reform bills, which collectively aim to create a tax structure that is fair, efficient, and effective in revenue collection. These bills are set to ensure proper tax administration while making compliance easier to taxpayers. Why the tax reform? Despite being the largest economy in Africa, Nigeria's tax to GDP ratio remains one of the lowest on the continent. In 2023, data from the International Monetary Fund showed the Nigerian tax to GDP ratio was approximately 9.4%, compared to South Africa, which stood at 21.6%, Kenya at 14.1%, and Senegal at 19.1%. In 2023, the total tax or levies revenue collected by the federal, state, and local governments stood at 26.03 trillion. According to the Joint Tax Board, only about 35 million Nigerians pay tax, while only 9% of companies registered in Nigeria are captured in the tax net. This imbalance is unsustainable if we are to adequately fund critical infrastructure needed to build the Nigerian economy to a desirable level. Experts have estimated that Nigeria requires 3 trillion, 1.8 quadrillion over the next 30 years. That is equivalent to over $100 billion annually to bridge its infrastructure deficits. However, our IGR falls significantly short of the amount, leading the government to borrow substantially in order to bridge the funding gap. This reality highlights the urgency of implementing a tax reform that will simplify and enhance revenue collection, reduce reliance on borrowing, and drive sustainable development. Today, we will deliberate on the following bills. The Nigerian Tax Bill. The Nigerian Tax Bill seeks to repeal the current tax laws and consolidate the legal framework relating to taxation and enact the Nigerian Tax Act to provide for taxation of income, transactions, and instruments, and for related matters. This bill harmonizes all existing tax laws into a single, comprehensive, and simplified piece of legislation. By doing so, it eliminates ambiguities, ensures consistency, and provides clarity for taxpayers and tax administration alike. 2. The Nigerian Tax Administration Bill. This bill seeks to establish a clear and structured process for tax administration, creating a more transparent and efficient tax system. It covers assessment, collection, and accounting for revenue accruing to federal, state, and local government. It also prescribes the powers and functions of revenue authorities. The third bill to be considered is the Nigerian Revenue Service Establishment Bill. This bill seeks to repeal the Federal Inland Revenue Service Establishment Act and establishes the Nigerian Revenue Service. The NRS will be responsible for collecting all federal taxes, ensuring better collaboration among revenue agencies across the 3 tiers of government and reducing inefficiencies in tax administration. The objective of this bill is to streamline tax processes, simplify tax administration, strengthen enforcement of tax laws, and progressively reduce the cost of revenue collection. And of course, finally, the Nigerian Joint Revenue Service Bill, Joint Board Service Bill. This bill seeks to establish the Joint Revenue Board, the Tax Appeal Tribunal, and the Office of Tax Ombudsman for the harmonization, coordination, promotion of the rights of taxpayers and tax dispute resolution and related matters. This board will be responsible for resolving disputes between various services, advising on tax policy matters, and proposing amendments to tax laws where necessary. Together, these 4 bills represent a transformative step for Nigeria's tax system by streamlining tax laws, improving administration, and enhancing revenue collection. They will set the nation on a path of sustainable economic growth while ensuring that taxpayers contribute their fair share. The legislative journey of the tax reform bills. Since the tax reform bills were transmitted to the National Assembly by the President, it has generated a lot of interest from all Nigerians as expected of any reform which deals with taxation. However, after careful study of the bills, majority of Nigerians have come to terms with the contents of the bill. Extensive stakeholder engagements have been conducted to address concerns raised by various interest groups. Now, having passed the second reading, the bill is at a crucial stage where they are open for public scrutiny and input. This public hearing serves as an opportunity for all concerned stakeholders to deliberate and propose necessary amendments to the bills to ensure the reforms achieve the intended objectives. The tax laws that we seek to reform will affect all Nigerians, both individuals and businesses operating within our economy. It is therefore imperative that we gather input from a broad range of stakeholders to ensure that these laws serve the best interests of the people. We expect contributions from all invited stakeholders who will present their views on the provisions that may require further refinement. We urge industry players, tax professionals, accountants, lawyers, the organized private sector, and economic experts to provide constructive feedback on how these bills can be improved to better achieve their intended objectives. This hearing is not just a legislative formality, it is an opportunity for us to collectively shape Nigeria's tax system for the future. We must ensure that our tax laws are practical, fair, and capable of driving economic growth while maintaining equity, fairness for taxpayers. The tax reform bills could provide us with a one-in-a-lifetime opportunity to create a modern, efficient, and effective system for Nigeria. We must seize this moment to make the process as robust and credible as possible. As we commence the public hearing, I urge all stakeholders to actively participate and share their insights. Your contributions today are invaluable to ensure that these legislations will help shape the policies that will govern taxation in Nigeria for generations to come. Let us work together to build a tax system that supports national development while ensuring fairness for all. Thank you, and I wish you all a productive and exciting deliberation. God bless Nigeria. Thank you.
Help us to the request, ladies and gentlemen. Taiwo Oyedele, Abiodun Falike, Honorable Member Leader, Right Honorable
in support of this bill. These bills, if this is what it will take to take Nigeria out of the present situation we are in. Our revenues are too low, our laws are archaic, and I think this is a very bold move by Mr. President. And I'm sure the National Assembly will do justice to this bill. The only observation after vigorous discussion that the Commission had was during a discussion with the Senate Committee of Elders, with Professor Tayo, the FRS chairman, and myself. We discussed some gray areas, and Professor Tayo promised that they will look at it and get back to you. And there are also another engagement with the Governors Forum on the issue of VAT and VAT distribution. There was an agreement with the Governors Forum, myself, Professor Tayo, and FIRS Chairman. So Revenue Mobilization, Allocation, and Fiscal Commission takes this position. Thank you very much, sir.
It provides a legal framework for the administration of taxes and revenue under any law, where Section 42 defines tax to include any duty and revenue accruable to the government. So this particular section subsumes everything that is provided under Section 3 and 4 of the NCS Act 2023. There are other ones. The copies have been provided. And because I had only 3 long minutes, I was just trying to rush over them. So our recommendation is as provided on the second to the last page, and our prayer is simple. A lot of effort and resources has gone into the enactment of the Nigeria Customs Service Act 2023 less than 2 years ago. We plead with the Assembly to let the law stay. Thank you.
Thank you very much.
We thank you for the opportunity given us, and we want to start by commending the initiative behind this tax reforms. And we observed that this is part of a wider effort by Mr. President to improve the business environment in Nigeria, make it more business friendly, and of course, more competitive. As a stakeholder, we, however, expressed some concerns in the document that we have sent. It's a 17-page document. I will make reference to some few sections where we observed jurisdictional conflicts between the provisions of the Joint Revenue Board Bill, Section 23 and 29 of the bill, and Section 41A of the Joint Revenue Bill. Basically, these are jurisdictional conflict issues. In the Nigerian Revenue Service Established Bill, Section 1 seeks to completely legislate Nigeria Customs Service out of existence, if you pardon my words. So we raised our objection, our observation also on Section 4S. And in Section 4S, this is also another omnibus provision. This particular provision gives the proposed NRS oversight functions over all taxes and levies. And as observed by the distinguished professor earlier, we are worried that this new law is seeking to override all previous laws that were done to address issues regarding the economy. I think it's also important, as we try to do on page 5 or page 4 of the document, that the substitution of the word tax, the substitution of the word duty by tax in very many areas of the bill seems to overlook the difference and the objective which these two tools can do in an economy. Our understanding is that tax is used to generate revenue for government, and it's also used to distribute wealth. However, duty goes beyond that. Duty is more of a fiscal policy tool, an instrument by government to encourage industrialization, to discourage environmental pollution, and to put in some kind of public health order. In subsequent parts of the paper, we went on to identify the professional nature of customs.
Order, please. Order, please.
We went on to identify the professional nature of the customs calling, which we believe are not related in any way to either general taxation or specific taxation. And these are the areas of HS classification, in the areas of valuation, and the areas of rules of origin. Because one of the objectives of this legislation is to bring us in tandem with global best practice. The paper that we submitted highlighted lessons that we have learned from many countries that have walked this route. And we picked out the World Customs Organization, for example. The data that we have from the World Customs Organization indicated that 179 out of 185 countries separate customs functions from tax revenue functions. But we went beyond that. We consulted studies that was done by OECD. There were a number of case studies that were published, and we attached this in the reference. And permit me to just read a particular case. While the Organization for Economic Cooperation and Development in 2022 reports on tax and customs administration integration initially appeared to support integration models, there are more recent and refined study, which was done in 2023, just about 2 years ago, reached substantially different conclusions. In this updated research, it was specifically acknowledged that the previous assessments which the research did may have overemphasized short-term revenue gains at the expense of long-term trade facilitation and security outcomes. The rest of the findings of this particular OECD studies is as attached or is as indicated on page 9. Other institutions, development partners, like the World Bank and the IMF, in some of their studies, they have also made some reversals in their previous submission. And let me take, for example, the case of a World Bank publication in 2023, where they made an analysis of customs autonomy and performance. These comprehensive studies examined 52 countries over a 15-year period and found that nations maintaining autonomous customs administrations demonstrated 31% higher rate of trade facilitation, and they scored 24% better revenue compliance than those with integrated administrations, which this bill seeks to propose. And the research specifically noted that specialized customs functions, including valuation, classification, and origin determination, shows measurable deterioration following integration with general tax authorities. So once you integrate them, these specialized areas will suffer. Let me give the last example from the United Kingdom. UK's case was mentioned by one of the previous speakers, but it was only mentioned in part, and I want to read for us. The UK's experience with integrating Her Majesty's Customs and Excise into Her Majesty's Revenue Customs in 2005 is very, very instructive. According to a comprehensive review by the Institute for Government, which was done in 2012, this merger was described as multi-deterrent with the rectifier due to fundamentally different operational culture and functions. Despite initial efficiency promises, the UK ultimately reversed course, separating border control functions and creating a dedicated UK border agency, thereby acknowledging the special nature of customs operations. This is quoted from House of Commons Affairs Committee, that's the Parliament of UK, the work of the UK Border Agency, and it was published in 2012. Of course, there are so many instances that we've had in Africa, and some of them are instructive. Uganda went this route by trying to integrate customs and tax authorities. The initial result was an increase of between 7 to 10% in tax to GDP ratio. And this data is provided by the IMF. However, according to the World Bank East African Customs Revenue Project Assessment, which was done recently in 2020, these gains proved unsustainable as operational complexities emerged and corruption challenges resurfaced, with clearance time increasing by 27% between 2000 and 2005. So there are other examples provided in the paper from Tanzania and from Ghana. On the flip side of this, the paper also indicated some African countries where deliberate attempts were made to modernize customs, And these examples are in Morocco, in South Korea, and these are leading customs administrations in the world. Morocco's customs modernization program increased revenue by 37% over the first 5 years, while reducing clearance time by 65%, according to the World Customs Organization Modernization Handbook. So what was done in Morocco, sir, I'm rounding up, is what the parliament in Nigeria undertook in 2023 by enacting the Nigeria Customs Service Act. And less than 2 years in the implementation of this act, the report and the result that we have in Nigeria is even better than Morocco's, because revenue has increased by over 92%, trade facilitation has improved as evidenced from our stakeholders. We are using technology to lead our fight against anti-smuggling. We therefore made some recommendations. And the principal recommendation we made was that we should encourage collaboration, integration of operations between customs and the tax authority, not to abolish customs or not to repeal a law because we want to do another law. I just put the rhetoric question. After all we have done today, if we succeed in passing this law, we succeed in passing this bill into law, and in 2 or 3 years' time, we are called back again.
Sorry to call you, but can you point to the section of any of this bill where it says custom bills are taken over? Can you please point to that section?
It was done at the beginning of the presentations. Okay, so if I have to read directly, sir. Mr. Chairman, the Nigerian Revenue Service Establishment Bill 2024, Section 1.
My name is Amulu Musa Ibrahim, the President, Association of Nigerian Taxation Students, ANTAS. I am here with the contribution by the Association of Nigerian Taxation Students on the proposed tax reform bill. The executive summary of our contribution. The Association of Nigerian Taxation Students is a conglomerate of students from various tax clubs and tax associations across the country, established in the year 2022. ANTAS aims to promote tax knowledge, advocacy, and compliance. The Association of Nigerian Taxation Students is committed to upholding the highest standard of professionalism and integrity in the tax profession. Issues and recommendations by the Association of Nigerian Taxation Students. Firstly, the appointment of tax agents. As students of taxation, we recognize taxation to be a specialized profession that requires expertise and professionalism. The National University Commission and the National Board of Technical Education have approved the study of taxation as a course in Nigeria in over 30 tertiary institutions, offering programs in the national diploma, higher national diploma, bachelor's degree, and even to PhD levels. This recognition underscores the importance of taxation as a distinct field that requires specialized knowledge and skills. Section 32 of the Nigerian Tax Administration Bill 2024 provides the accreditation of tax agent. Specifically, it states, for the purpose of compliance with this act or any other law, a taxpayer may either represent itself or be represented by a tax agent accredited by the relevant tax authority. Secondly, the requirement for accreditation shall be set out by the relevant tax authority. Thirdly, no return shall be deemed as duly filed except filed by the taxpayer or an accredited agent. Fourthly, the returns shall be accompanied by a declaration or attestation that the information supplied are true and correct. However, the definition of tax agent in Section 143 of the same bill raises concern, where it states as follows: tax agent means any person knowledge and duly certified by a professional body in Nigeria to represent a taxable person. Tax authority means the Nigerian Revenue Service or the Revenue Authority of a state or the Federal Capital Territory in Nigeria. The current definition allows any professional body in Nigeria to certify individuals as tax agents, potentially undermining the professionalism of taxation. We, the Association of Nigerian Taxation Students, strongly recommend that definition of tax agent be amended to require certification by a professional body in Nigeria, such as the Chartered Institute of Taxation of Nigeria, CITN. This will ensure that only qualified and competent individuals are appointed as tax agents, and that taxation is treated with professionalism and expertise it deserves. Second issue, dual authority for the appointment of tax agents. Section 32 of the Nigerian Tax Administration Bill 2024 and Section 5N of the Joint Revenue Board of Nigeria Establishment Bill 2024 create a dual authority for the appointment of tax agents. This may lead to policy inconsistency and conflicting appointment powers. We recommend that the Joint Tax Board provide uniform guidelines for the appointment of tax agents in Nigeria to avoid confusion and ensure consistency. Thirdly, development levy and removal of tertiary education tax. Section 59 of the Nigerian Tax Administration Bill, HB 1756, proposes a single development levy consolidating 3 annual deductions on companies' profit. The levy will progressively decline from 4% in 2025 and 2026 to 2% from 2030. However, the discontinuation of tertiary education trust funds, TED fund allocation by 2030 raises a concern. 3.1, funding gap for tertiary institutions. The removal of TED fund allocation will significantly reduce financial resources for universities, polytechnics, and colleges of education in Nigeria. TED fund has historically supported infrastructures, research funding, and faculty training, of which will be at risk if removed. 3.2, increase financial burden on students. Without TED fund support, higher institutions may increase the tuition fee to cover operational costs, making education costs unaffordable for many Nigerian students. The higher cost of education could lead to increased dropout rates, reduced enrollment. 3.3, uncertainty in the student loan system. The effectiveness of student education loan funding is uncertain, as it depends on proper implementation, access, and repayment structure. Poor administration of loan could result in financial distress for students who may struggle to secure funding. Impact on research and innovation. Reduced funding may stifle academic research and technological advancement in tertiary institutions. Our recommendations: maintain TED fund allocation alongside student loan scheme. We propose that the government retain at least 50% of the TET fund allocation beyond 2029 to support tertiary education institutions. This will ensure continued funding for infrastructures, research, and faculty development, implement a transparent and efficient loan system. The government should encourage public-private partnership to supplement tertiary education funding. In summary, while we acknowledge the intent behind the new development levy, we urge the National Assembly to consider the complete removal of TET fund support for the tertiary education. We appreciate your consideration for these recommendations and hope that necessary amendment will be made in the best interest of Nigerian students best interest of Nigerian students and the future of education system in Nigeria. In conclusion, the Association of Nigerian Taxation Students says, as future tax professionals, we are committed to upholding high standard and professionalism in the tax profession. We believe that the provision of the tax reform bill must align with the principle of good governance, fairness, and transparency. We urge the National Assembly to consider our recommendations and ensure that tax reform bill promote a tax system that is efficient, effective, and fair. We look forward to a future where taxation is respected, trusted, and we are committed to playing our part in achieving this goal. Thank you for the audience.
Thank you. Order, please. Hello, please order. There's a lot of interruptions in our proceedings. Please order. If you're not ready to keep quiet, please, can you kindly go out of the place, please? We need to make this process orderly.
Thank you. I am Simon Nwanmeyi Gato, the Deputy Vice President of the Chartered Institute of Taxation of Nigeria, and I stand in here on behalf of the President of the Institute and all the over 30,000 members of the Institute. Because I have just 3 minutes, the document we've submitted, there are about 8 different items we've stated if you look at the document on page 12, which you would look into. But I would just want to speak. Oh, thank you. I would want to speak more specifically to the aspect of the Nigerian Tax Administration Bill, which incidentally was discussed just here, section 32, and also the interpretation of the Joint Revenue Board Nigeria Establishment Bill, the interpretation on section 143. And the simple thing we are observing there by virtue of the definition of tax agents, is that it could actually lead to issues. We want a situation whereby, tax practice as it is not just left to every or any professional body, but to be strictly regulated, more so that the act establishing the CITN has been there since 1992, and we feel that if we are allowed to professionalize in our various fields, it will be an added advantage to us rather than to allow a situation where the interpretation in section 143 suggests that any other professional body could actually come in and be approved as a tax agent. And we feel, so in that light, in our suggestion, there's a table, just 2 pages, in which we have highlighted the observation and also suggested how it should be interpreted. That it shouldn't just be any professional body, but the tax professional body relevant for that. I would just want to emphasize, yes, indeed, we're talking about global practices. And indeed, there are countries that are regulating taxation in other countries. But let's not forget that we equally have countries that are indeed having tax professional bodies, and they are doing very well. Even some of the countries cited here, not quite long, you would find out that the relevant tax authorities that are actually bringing in or accrediting these agents in those relevant tax authorities, they still insist that as an accountant, for instance, in the United States, you still need to pass through some training, specifically on taxation because of how sensitive it is before you can become an agent in such a place. But I think we have specifically, even from the ones listed, some of the companies like, CIOT in the UK, there is a professional body, the Chartered Institute of Taxation UK. We also have the Institute of Taxation Ireland. The Canada Institute of Taxation still exists, and of course the Institute of Certified Tax Professionals in South Africa. All these ones, including our near country here, Ghana and others, we are of the opinion that we should please be more allowed to specialize. Today we are having students and we are having universities that are indeed, offering taxation courses, and I think it is encouraging that we allow us to thrive and to progress. I just wanted to emphasize on this one point. The rest of the narratives will be are already narrated in just 2 pages, which we will go through on all areas that we have offered contributions. And I must state clearly that the Institute stands by these very bills. We are in support, except for this observation that we want you people to please look into. Thank you very much.
I stand to present the ICANN position on the reform bill. We've made our submission, detailed submission on areas of improvement. But we want to be on record that ICANN is in full support with all the provisions in the tax reform bills. Specifically, we want to lay credence to Section 32 of Nigerian Tax Administration Bill on accreditation of tax agents by relevant tax authorities. We are fully in support of it as it is well aligned with the international best practice. I can give 10 countries that are using this model, whereby tax agents are being regulated by the tax authorities. The relevant professional bodies should concentrate on setting standards and examining will-be professionals. Some of these countries that are using this model as we have in the bill are Australia. Tax Practitioner Board regulate tax agents. The board is a Department of Australian Tax Authorities. Canada, Canadian Revenue Agency, CRA, regulate tax preparers and consultants through CRS represent a client program. United Kingdom, His Majesty Revenue and Custom, HMRC, regulate tax agents through HMRC Agent Strategy and Professional Standards Unit. United States, Inland Revenue Service of U.S. regulate tax return preparers through annual filing season program and enroll agent program. South Africa Revenue Service, SARS, regulate tax practitioner through SARS Registered Tax Practitioner Program. India Central Board of Direct Tax, regulate tax professionals. Singapore, Inland Revenue Authority of Singapore, IRAS, regulate tax agents through IRS Tax Agent Registration Program. New Zealand, Inland Revenue Service, Inland Revenue Department, RD, regulate tax agents through IRD Tax Agent Program. Ireland, Revenue Commissioner regulate tax practitioner. Malaysia, Inland Revenue Board of Malaysia, IRBM regulate tax agents through IRMB Tax Agent License Program. These revenue authorities regulate tax agents to ensure competency and qualification, compliance with tax laws and regulations, professional conduct and ethics, and protection of taxpayer confidentiality and data security. Other details and areas of improvement that is being suggested by ICANN is stipulated in our detailed report that we've submitted to the gathering. So on that note, I can stand fully to support this, particularly this section 32, and it is in line with international best practice, and Nigeria should not be out of the international committee. So we support it, and we think it should be retained. Thank you, sir.
An overview. As Nigerians, if we don't administer the revenues collected from tax properly, it will scare foreign direct investments in Nigeria. That's why we are also in support of the management of taxes collected at all levels of government for health, education, and infrastructure. We are also in support of the position of Mr. President on the distribution of VAT, which some people are scared of going explicitly to talk about it here. That we are in support of 60% on derivation, 20% on equality, and 20% on population. Reason being that we want to encourage Nigerians to work hard to develop their states respectively, generate more revenue, and see that this country is developed across board, everywhere, north, south, east, and west. We don't want to encourage our children to be, lazy, where they will not develop the solid minerals and whatever they have in their states, to see that more taxes are generated and the states are developed very fast. So this is our position with Mr. President, and therefore we are not in tandem with the Governors Forum, which wants to encourage money to be collected from certain sectors of the economy and then shared to other parts of the country. No. We want to be very clear about this, that the more you generate revenue, the more you get from the VAT sharing formula, and the more you develop your place. And whatever you have that's lying on the ground, please start exploration, make contacts, and begin to develop your states, generate more revenue, get more allocation, and then spend it. So we don't want to bore this committee too much with a lot of words, but having made these statements, we want to be clear that we are in support of the position of the President of the Federal Republic of Nigeria on the tax reform bill, that this bill should be implemented as proposed. Thank you very much, and God bless you.
These 4 pieces of legislation, and who is also part of the Kano delegation. If I may respond to the issue raised by the chair, it is our view, and the view of people of Kano, that the Nigerian Governors Forum cannot speak decisively and exclusively to preclude positions being taken different from what they have taken. So our memo has, in a way, modified that position, and we think we're entitled to do that. Now, I have reviewed these pieces of legislation, and I have serious concerns with the Chairman with the potential implication of these bills, which you in your statement read about 20 pieces of legislation that are liable of being amended or repealed. Now, I shudder to foresee what would happen if you overlook some existing legislation, and even in the language you have used in the legislations, that there may be a deluge of legal challenges to an act that seeks to do away with these legislation without being specific about particular sections. Let me refer to the two tax administration and the Nigerian Revenue Service. Both pieces of legislations in Section 7 and 141 have used the language of notwithstanding, meaning that they want to exclude that whatever these pieces of legislation have not approved of or admitted, then they will amount to having no effect. Yesterday when I was at the Senate, but the position I took was that this looks like an ouster clause that the military are in the habit of putting, and therefore it will not withstand the constitutional litmus test to say that any other piece of legislation that provides something contrary to what is being proposed will have no effect. Related to this is Section 141, where an introduction is made of the supremacy of clause. The act or the bill being proposed is given the supremacy status like the Constitution. Only the Nigerian Constitution has supremacy, and therefore, if you were to enact any of these bills, and you enact them on the basis that they are supreme over any other law which contradict them, I think that would be wrong. And that will be contrary to the constitutional provision. The third issue I would raise also from a legal point of view, Mr. Chairman, is in the boards that you have established, I think it is the tax administration, you are establishing a board, management board, giving it the name National Revenue Service, but having members that are only ex officio mainly, with the chairman of the board, and 6 representatives of geopolitical zones. I think this goes contrary to the federal character of this nation, and that you either call it Federal Revenue Service Board, in which case you can have any number of ex officio members, or if you want to make it truly federal, then you should have each state represented on that board. My preference is that it will be wrong to have such a bill or such an enactment that looks federal in outlook, but also subsumes states' interest in it. The fourth point, Mr. Chairman, is that, again, the Tax Administration Act, bills, before it becomes act, has established that hereby there shall be established for state and local government certain boards. I think if you question the legal capacity and entitlement of the National Assembly to enact these laws, what right do they have to establish by fiat boards for states and boards for local governments? I think this is also a serious constitutional issue that I think is avoidable. On the final note, Mr. Chairman, there is the capital transfer issue that is being disputed, that it is not inheritance tax. I read the piece of legislation. I read the tenor. It is referring any law, including customary laws, and that if you are entitled to anything which is not divided, that it is chargeable by way of taxation. I think, as has been submitted, this is not acceptable for Muslims and Christians. There was a submission yesterday that you are imposing a tax on an entitlement of an inheritance by members, and then you are calling it not inheritance tax. Yesterday I used the example, if it quacks like a duck, swims like a duck, behaves like a duck, it probably is a duck. So what I'm saying here is, what you're proposing here, you say is not inherent tax. It looks like a duck to me. And therefore, if you want to have this piece of legislation, and luckily, the provision you have made is that the entitlement, the whatever is collected is entitled by the state where the person is resident. Now, if that's the intention, on the one hand, I think it is wrong, absolutely unacceptable, but on the second leg, now make it alternative, optional, meaning like, as I gave the example, if you look at section 275 of the Nigerian Constitution, it makes the establishment of Sharia courts for any state which requires it. Now, if you want also establish this inheritance tax, capital gain tax, whatever name you call it, but I call it a duck, you should give states the right, if they want to establish it, and not establish it for them. Thank you, Mr. Chairman.
And people of Kano, and I'm making a summary of the memorandum we have submitted for your consideration. Mr. Chairman, let me make one or two general observations first. They should be put on record that the government and people of Kano are in support of reforms. And in particular, we are in support of fiscal reforms that would expand the fiscal space in this country and that would engender efficiency in the operation of the fiscal system. We think that it's unrealistic to expect Nigeria to survive on revenues that are barely 10% of our GDP. We know that we are doing much less than what other economies are doing, in sub-Saharan Africa. We are doing much less than, we are doing worse than countries like South Africa and Rwanda and Ghana and so on. And therefore it is important, it's imperative that we reform the fiscal system. We think that the tax system in this country is complex and cumbersome, that in spite of past reforms that we have had, that is still, administration is still weak, is riddled with inefficiency and corruption and poor governance and so on and so forth. So we are in support of the federal government for initiating the tax reforms. Having said that, Mr. Chairman, we are also saying that the House of Representatives and the Senate have responsibility to ensure that this is handled judiciously and responsibly, that whatever tax system we propose, whatever fiscal system we propose, is based on three key principles of justice, of fairness, and equity. That it is the responsibility of the House to ensure that when you pass this bill, you do not put additional burden on the citizens of this country, that it is important that you do not exacerbate the uneven development of federating units. It is important to bear this in mind, and this comment applies to all the bills that you are likely to pass. Mr. Chairman, there are specific recommendations that we make. With regards to the Nigerian tax bill, we think that the review and harmonization of multiple taxes in this country is welcome, is overdue. We think that harmonization would enhance clarity, it would enhance compliance, and also engender efficiency and legislative coherence. So this is excellent. Number two, the review of incentives is also welcome because it will address issues of effectiveness. We think that there are lots of there are issues of effectiveness and efficiency and governance in the administration of incentives in this country, so it's welcome. We welcome the provisions for progressive taxation. We think that this is also long overdue to do so. So then we go to other specific recommendations. With regards to VAT, I'm sure lots of people will be interested in this one. We do not think that we should contemplate any increases in VAT rates at this time. We think that there is a need for the government to expand the fiscal space, but when inflation is at 34% and VAT is a consumption tax, we do not think that this is the right time for us to contemplate increasing the VAT rates. We think there is room for improvement in collection efficiency. We understand that collection efficiency is less than 40% as far as VAT is concerned. We think that there's a room for that, and we know that the tax system is responsive to such policy changes. So I think the initial focus should be on improving efficiency, coverage, and efficiency. With regards to the distribution formula, we think that these three principles are good. They're excellent: population, equality, and derivation. If you apply them judiciously and responsibly, I think they will address our concerns for efficiency, for justice and fairness and equity. However, I think we also have to be aware of the difficulties the committee has in defining, in interpreting what derivation is. So what are we recommending? We are saying that the current framework in the Act, not in the bills, the current framework in the Act, which provides for horizontal distribution of 50% to the federal government, 50% to the states, and 35% to the local government, should be retained for a transitional period of 2 years, within which we'll be able to get sufficient data that will justify the derivation principle. For the vertical formula, we are saying that what obtains in the Act, population 30%, equality 50%, and derivation 20%, should also be retained for a transitional period of 2 years. I mean, that can be negotiated, maybe 2 years or 1 year, but it's for us to be able to understand exactly what data we use in having the derivation principles. We are of the view that you have laws to strengthen institutions, not to destroy them. And therefore, the provision that these three institutions of government would cease to access funds should be reconsidered. In other words, TETFund and NITA and the should continue to access the development levy, and that their fund should be a beneficiary of the current 4% development levy. Finally, Mr. Chairman, in line with the section 162, subsection 2 of the Constitution, we think that RAMFAC should be allowed to exercise its mandate in proposing what the formula should be. I know the controversy between the committee and RAMFAC, whether they have the responsibility to do that. I think government should not attempt overtly or covertly to undermine its institutions. That this is something that you don't have to debate that in public. I think the committee and the institution, RAMFAC, should be able to come to terms with those. We thank you very much for the opportunity again, and we hope that we are going to arrive at something that is good for the generality of Nigerians. Thank you very much.
Ucheris, on behalf of the retired industrial inspectors of the Industrial Inspectorate Department of Federal Ministry of Industry, Trade and Investment, wish to make this presentation. We are retired though, but we have experience over 30 years in carrying out fiscal inspection of companies, capital undertakings, that qualify for certificate of acceptance and capital allowances. In view of the proposed amendment of the Nigerian tax bill, especially section 1759, and as an interested stakeholder, we wish to express our deep concern over the exclusion of the Industrial Inspectorate Department from the proposed bill. The physical inspection of companies' assets entrusted to the Industrial Inspectorate Department before the issuance of certificate of acceptance in order to validate the capital allowance is based on the following reasons and procedures, among others. To confirm the existence of these assets, for example, the plants, machinery, equipment, furniture and fittings, computer softwares, office equipment, vehicles, shipping vessels, aircrafts, among others. To evaluate the physical conditions, operational status, and most importantly, the fair market value of the assets, to prevent overstatement or misrepresentation of the assets in the financial statements or asset registers submitted to the FIRS, to ensure that the physical assets are in use by the company for the year under claim. Ownership verification, to confirm ownership or resolve disputes about leased, financed, or placed machinery. Reconcile the physical structures as buildings, fences, roads, etc., with the drawing details. Our request, therefore, the House Committee on Finance is kindly requested to consider and reinstate the mandates and operations of the Industrial Inspectorate Department as outlined in the Industrial Inspectorate Act 18 of Law Federation of Nigeria 2004 regarding certificate of acceptance for new and additional investment value. That the certificate of acceptance should remain a statutory requirement for granting capital allowance to companies by the Federal Inland Revenue Services. Thank you for this opportunity.
And to also highlight, and I'm sure Chairman FRS will agree, that we are the largest tax-paying corporate entity in the country. Yes, I'm coming to this, sir. Yes, sir. Yes, I'm coming to this, sir. Yes, I have an amendment to the submission. That is why you allow me, I will resubmit it tomorrow morning unfailingly, but I can speak to the SS, Mr. Chairman. That's right. Yeah, I'm too tall. I don't know how to deal with it, yeah? Okay, maybe I have to bend.
It's okay, just speak to the mic.
Okay, thank you, Chairman. What I'm saying is that I have some amendments to the submission, and I would like to hold it back and update it and return back to you tomorrow morning. But I will speak to the essence of the submission that I would have handed over to you now. But the essence, Mr.
Please, you can submit your document and then we'll take it tomorrow. Please, we'll take it tomorrow. Or Friday, any day you want to come.
Okay, so you want me to?
Thank you.
Thank you.
Please, members of the public, we are here in this public hearing. Please, I will like to see all of you on this cameraman. Can you please clear this part? Clear the eye, please. And we should stop moving about. Please. Chairman of the press corps, House of Reps, can you please take charge? We don't want to walk anybody out of here. Thank you. Supervision Authority. Land Supervision Authority, are you here? Retired industrial inspectors of industrial inspectors. We have had all these inspectors. Are you here, retired inspectors? You are retired, very retired? Please, take the mic.
This is Professor Abuchi. I am representing Anna. Anna largely supports this bill. However, there are some areas that needs to be looked into. The first area we mentioned is in section 143 of the Nigerian Tax Administration Bill, HB 1756. There on page C4738 appears to be conflicting with what is written in section 203 of the Nigerian Tax Bill, HB 1759, page 140, where on one hand is talking about the fixed assets of 100 million, while in the other bill is talking about the fixed assets of 250 million. It needs to be clarified. Then on the second one is the area of the professional services, where the professionals are said to be defined as people. Professional services means services provided by an individual or a firm having specialized knowledge, skills, and qualifications in specific fields, but now including consulting, planning, or support services, but excluding artisan and vocational services. What we feel that should be read is there in our submissions already made. There is another area I need to talk to. It's on section 59 of the Nigerian Tax Bill, the area of the development levy, where the bill seeks to, by 2030, to seize the third fund. We feel that this agency has, over the years, performed excellently well, and seizing it from 2030 may not be ideal, but it needs to continue. We enumerated in our submissions what we think should be done so that it will eventually encapsulate and the continuance of third fund so that education will not suffer. Then on section 32 of the Nigerian Tax Administration Bill, the tax agent accreditation by the relevant tax authority, it appears to be encroaching on an existing law of CITN. In countries where you have accreditation by the tax authorities, they do not have separate bodies of Chartered Institute of Taxation of Nigeria. This needs to be harmonized. Then we are looking at the classification of industries or companies, where practically section 56 tax rate on Nigerian tax bill HB 1759 has practically removed the medium-sized companies. We feel, as we enunciated in our submission, that it has to still separate and still give room for small, medium, and large companies. These are our submissions, while other ones and our suggestions are there encapsulated in our write-up. Thank you so very much.
Thank you.
And other members of the committee. The Federal Ministry of Industry, Trade and Investment agrees, of course, completely with the tax reform bills, but has observations, particularly on the Nigerian Tax Bill 2024, on two areas. And these two areas apply to both mandates that are presently prevalent in the ministry. The mandate on industry and the mandate on trade and investment. In section 1982 and 3, I'd like to call attention to the fact that the Export Processing Zones Associations organized a conference in Lagos last week. The Minister of Trade and Investment was present, and it was a very chaotic meeting. And all of that has to do with the reactions and the commentaries on section 1982 and 3, section 57, and some particular clauses in the second schedule. The hope of the ministry is that these associations, working with the Federal Inland Revenue Service, will be able to find a common ground, and the committee will assist in harmonizing this, because there are issues of tax exemptions and tax incentives that are implicated in these sections. And it is important that Nigeria's industrial environment and growth is not affected by what law comes out. The second deals directly with industry. And I think that sitting here, I've listened to quite a number of interventions having to do with the first schedule, line 8 of the Nigerian tax bill. And all of that concerns CAFA, the Certificate of Acceptance of Fixed Assets. And the concern of the ministry is simple. It's on emphasizing the significance of this certificate for new and additional investments in granting capital allowance, and to seek the indulgence of the committee that these be captured. The Industrial Development Department has in it engineers and experts in physical sciences that are best positioned to do physical examination of these new investments in order that there's no reliance completely on receipts, invoices, and co. It is the hope of the Ministry of Industry, Trade and Investment that the committee would be able to respond to these two issues in order to allow the ministry to remain competitive both in supervising and monitoring industrial growth and development, and in encouraging manufacturers, those who want to invest in our country, not to be adversely affected. I thank you, Mr. Chairman.
The Tax Lawyers and Advisors Forum. Because of time constraint, I'd like to just briefly touch on the bills that we have mentioned here. We have actually touched on the entire 4 bills: the Nigerian Tax Administration Bill 2024, the Nigerian Revenue Service Establishment Bill, the Joint Revenue Board Establishment Bill, and the Nigerian Tax Bill. We had forwarded our opinion as a body to the office that is concerned with this process. I will officially adopt the memoranda that we have submitted, touching on all of the bills. Because of time, we'll not be able to look at them chapter by chapter. We have done a detailed work, particularly section by section, that we felt things that are expected to be done there, and we also adopted all that we have submitted. I thank you very much for listening to me.
Thank you very much. Thank you.
Distinguished Chairman and members, I want to thank you for this opportunity. So for us, our Fiscal Responsibility Commission, we've gone through the 4 tax bills, and we are convinced that the bills, when passed and signed into law, will strengthen the macroeconomic stability of our nation. These laws will definitely improve on the objectives as set out in Section 16 of the 1999 Constitution as amended. Our Commission have found no objection whatsoever with the 4 bills because they are in tandem with the spirit and intent of Fiscal Responsibility Act 2007. We have found these bills that will strengthen modernization and harmonization of all the tax heads, which are well over 49 and being merged into about 10 laws if eventually passed. It will make for easier operation of the tax system and will make collection a lot easier. It will also support small businesses. We also find it that it will also support the low-income earners, which will reduce poverty. We have, sorry, however, we have some observations. We have some observations in the area of conflict with Fiscal Responsibility Act number 31 of 2007. We refer particularly on the Joint Revenue Board Bill 583. Our observation, sir, is that it's in line with timeline. The timelines given in some of the provisions will contradict and will not help for easy management of the fiscal policies of the government. 1. Section 18.1 of the bill. The bill I'm referring here is the Joint Revenue Board Bill. The board shall not later than 30th September in each year submit to the minister a report of its activities during the preceding year and shall include in such report the audited accounts of the board. This is underlined for emphasis. The Commission proposes an adjustment to the timeline contained in the said section to read not later than 30th April in each succeeding financial year. This amendment will make the report to be submitted in good time to enable the Honorable Minister to include same in the report required under Section 49(1) of FRA 2007, which provides that the federal government shall publish its audited financial statement not later than 6 months following the end of each fiscal year. The second observation is on the Revenue Service Establishment Bill. Section 24 of the proposed bill provides that the service shall not later than 30th September in each year submit an estimate of income and expenditure for the succeeding year for the purpose of appropriation to the National Assembly. For the purpose of avoiding conflict that may arise in future, sir, it's our considered opinion that it's important that this submission is made not later than August, 30th of August of each succeeding year in order to align with Section 21, Sub 1 and 2 of FRA, which clearly provides and is critical that the government, corporation, and the agencies of government listed in the schedule to this Act shall not later than 6 months from the commencement of this Act and for every 3 financial year thereafter of each second year, costs to be prepared and submitted to the minister, their scheduled estimates of revenue and expenditure for the next 3 years. So what we are talking here is to make for planning so that the National Assembly can get this.
Thank you.
Sir.
Thank you.
Okay, sir. Very well, sir. Apart from this, Thank you, Chairman.
I represent the Institute of Appraisals and Cost Engineers, a division of the Nigerian Society of Engineers, which is mandated by NSC to promote valuation, cost engineering, and engineering and economic practices in Nigeria. Our concern is on Section 27 of the proposed Nigeria Tax Administration Bill 2024 with respect to the use of Certificate of Acceptance for Fixed Assets, CAFA, in tax administration. We hereby invite this honorable committee to note that the need for checks and balances necessitated the Industrial Inspectorate Act, Cap 18, Laws of the Federal Republic of Nigeria, 2004, which empowers the Industrial Inspectorate Department, IID, of the Federal Ministry of Industry, Trade and Investment to carry out investigations into any proposed new and existing undertaking involving capital expenditure, and in particular for the purposes of determining the investment valuation of the undertakings. Companies proposing to start a new undertaking or incur additional capital expenditure in respect of an existing undertaking ought to notify the IID of their intention to incur capital expenditure. The IID is then expected to carry out valuation of the assets to satisfy the value of the assets of the capital expenditure by the issuance of Certificate of Acceptance for Fixed Assets, CAFA. Now, the bill, the section 27 of the proposed bill provides for the deduction of capital allowance of the total assessable profit to be taxed in an assessment year. This section does not specify the body responsible for verifying the qualifying capital expenditure. Now,
2 minutes more.
the absence of CAFA will mean that the Federal Inland Revenue Service will rely solely on the use of invoices, receipts, and audited accounts of companies as sufficient instruments for determining the value of an asset. This could lead to abuse. What we are advocating, sir, is what the Institute is advocating is that to promote robust industrialization and sustainable economic growth, the House Committee on Finance Assembly requested to reinstate the use of a Certificate of Acceptance for Fixed Assets in line with the Industrial Inspectorate Act, as the certificate authenticates the actual value of investment and provides verifiable information for granting capital allowance to deserving companies. Thank you.
Thank you.
May I rest on the existing protocol to say my name is Daniel Eke, the National Coordinator of Crime Center for Citizens Empowerment and Development. I think I don't want to bore us here, more especially because of the time constraint. I just want to summarize our views. Already we have submitted our views to the committee, so that I'll just give a brief synopsis of what is encapsulated in our submission. The first one is that the Industrial Inspectorate Department, IID of the Federal Ministry of Industry, Trade and Investment.
Hello? Mention the bill.
Okay, that's the tax bill. I'm sorry, the Nigerian tax bill. That's I'm going to talk on. That's mainly where our points are made. That the Industrial Inspectorate Department (ID) of the Federal Ministry of Industry, Trade and Investment (FMITI) should collaborate with the Federal Inland Revenue Service (FIRS) by including the certificate of acceptance for fixed asset (CAFA) issued by the industry.
Mr. Daniel, what you are reading is not part of the bill before us. You are asking us, you are seeking for a new section, is that correct?
Yes, basically. Can I just go ahead and...
Mr. Daniel, what I'm saying is the bill before us does not contain the statement you are making. So you need to tell Nigerians that you are seeking for this and that to be included or excluded.
Okay, thank you very much, sir. We are seeking that these points I'm going to make are captured in the Nigerian tax bill. Maybe I'll go ahead again and take it. Yes, that the Industrial Inspectorate Department (ID) of the Federal Ministry of Industry, Trade and Investment.
Which section? Go ahead. Your point.
Okay.
Your point. Proceed.
That the Federal Ministry of Industry, Trade and Investment should collaborate with the Federal Inland Revenue Service (FIRS) by including the certificate of acceptance in fixed assets (CAFA) issued by the Industrial Inspectorate Department of the Federal Ministry of Industry, Trade and Investment for granting capital allowance. Then the other issue will be, this one is in our submission, that the IID Department of the Ministry of Industry, Trade and Investment should be allowed to investigate the claims before the issuance of a certificate of acceptance. Then the last one in our point is that we gave some foreign examples where this collaboration between agencies are carried out. And if Nigeria will want to, we need to adopt the same something in order for us to meet international best practices. So in that regard, if we don't if there's no collaboration between the department and FIRS, there will be no such international distinct best practices in this regard. Then our prayers specifically, I'll go straight to our prayers now. The first one is that the certificate of acceptance of new or additional investment value should remain a statutory requirement for the computation of capital allowance and should be included in the first schedule, line 18 of the bill, that is HB 1759, page C 4843 of the bill. Then the second prayer we are seeking or asking for is that the Minister of Industry, Trade and Investment should be responsible for supervising the processing of Economic Development Incentive Certificate through the Nigeria Investment Promotion Commission, NIPC. On page C4966,
line 5 of the bill. Then finally, in the Annex 5 of the bill, Nigerian tax bill, where the phrase, we want this aspect I'm going to mention now to be captured, that the phrase relevant authority should be clearly stated as the Industrial Inspectorate Department of the Federal Ministry of Industry, Trade and Investment for certifying the production day. This is found on page C4937, line 20 of the bill. Thank you very much for giving us the opportunity.
Are you a civil servant? Because I can see that you are defending the department of the ministry.
Well, he just, because what we are doing is in the interest, I suggest, I'm not a civil servant, but as Nigerians, as well as a Nigerian, and my group as members of this, as Nigerians also, we are being encouraged by national interest to suggest what is good for all of us.
Thank you very much.
Thank you.
Thank you.
Protocol. Mr. Chairman, we at Nigeria LNG, we are delighted to be part of today's hearing for the purpose of discussing our views on this landmark legislation that seeks to reform tax administration in the country. In furtherance of that
senior ranking members here, honorable colleagues of the Committee of Finance, members of the public, good afternoon. It's indeed a great day for our country. I think there is no bill, there is no proposal in the 10th Assembly that has elicited the kind of interest that the tax reform bills have elicited, and understandably so. As an institution and as a house, we've done quite a lot in reaching out to critical stakeholders. We try to build consensus even before presenting these all-important bills to the second reading. Fortunately, they have passed through the second reading, and this is another very important stage of
to address the Controller General of Customs perfectly as Adewale Bashir Adeniyi, MFR. You're welcome, sir.
If he off, drop me a message. Or if you drop me a message for WhatsApp, if you just drop me a message on Flash.
Let me use this opportunity to thank Nigerians for their support, understanding, and patience. There will be light at the end of the tunnel. In fact, there is light at the end of these few remarks. It is now to formally declare this public hearing open. We look forward to receiving the full report as soon as possible. Thank you, and may God continue to bless the Federal Republic of Nigeria. These are the words of Right Honorable Tajuddin Abbas, Speaker, House of Reps. Thank you very much for listening. Alaba.
About 35 million Nigerians pay tax, while only 9% of companies registered in Nigeria are captured in the tax net. This imbalance is unsustainable if we are to adequately fund critical infrastructure needed to build the Nigerian economy to a desirable level. Experts have estimated that Nigeria requires 3 trillion, 1.8 quadrillion over the next 30 years. That is equivalent to about $100 billion annually to bridge its infrastructure deficits. However, our Nigeria falls significantly short of the amount, leading the government to borrow substantially in order to bridge the funding gap. This reality highlights the urgency of implementing a tax reform that will simplify and enhance revenue collection, reduce reliance on borrowing, and drive sustainable development. Today, we will deliberate on the following bills. The Nigerian Tax Bill. The Nigerian Tax Bill seeks to repeal the current tax laws and consolidate the legal framework relating to taxation and enact the Nigerian Tax Act to provide for taxation of income, transactions, and instruments, and for related matters. This bill harmonizes all existing tax laws into a single, comprehensive, and simplified piece of legislation. By doing so, it eliminates ambiguities, ensures consistency, and provides clarity for taxpayers and tax administration alike. 2, the Nigerian Tax Administration Bill. This bill seeks to establish a clear and structured process for tax administration, creating a more transparent and efficient tax system. It covers assessment, collection, and accounting for revenue accruing to Federation, federal, state, and local government. It also prescribes the powers and functions of revenue authorities. The third bill to be considered is the Nigerian Revenue Service Establishment Bill. This bill seeks to repeal the Federal Inland Revenue Service Establishment Act and establishes the Nigerian Revenue Service. The NRS will be responsible for collecting all federal taxes, ensuring better collaboration among revenue agencies across the 3 tiers of government and reducing efficiencies in tax administration. The objective of this bill is to streamline tax processes, simplify tax administration, strengthen enforcement of tax laws, and progressively reduce the cost of revenue collection. And of course, finally, the Nigeria Joint Revenue Service Bill, Joint Board Service Bill. This bill seeks to establish the Joint Revenue Board, the Tax Appeal Tribunal, and the Office of Tax Ombudsman for the harmonization, coordination, promotion of the rights of taxpayers and tax dispute resolution and related matters. This board will be responsible for resolving disputes between various services, advising on tax policy matters, and proposing amendments to tax laws where necessary. Together, these 4 bills represent a transformative step for Nigeria's tax system by streamlining tax laws, improving administration, and enhancing revenue collection. They will set the nation on a path of sustainable economic growth while ensuring that taxpayers contribute their fair share. The legislative journey of the tax reform bills. Since the tax reform bills were transmitted to the National Assembly by the President, It has generated a lot of interest from all Nigerians, as expected of the Value Added Tax Act enacted in 1993, the Personal Income Tax Act enacted also in 1993, the Income Tax Authorized Communications Act enacted in 1966, Capital Gain Tax enacted in 1967, Stamp Duties Act 1979, Casino Act 1965, Deep Offshore and Inland Basin Act in 1999, Industrial Development Income Tax Relief Act in 1971, Petroleum Profit Tax Act in 1959, that was the year I was born, Venture Capital Incentives Act in 1993. Most of these acts have been amended severally over the years. Since 2019, successful finance acts have been introduced to provide quick fix amendments to some of these archaic provisions. However, these amendments have been piecemeal and have not comprehensively addressed all the issues within our tax system. Recognizing the urgency of a more holistic reform, the President inaugurated the Fiscal Policy and Tax Reform Committee with a to overhaul and simplify the tax system. The committee worked assiduously to produce these tax reform bills, which collectively aim to create a tax structure that is fair, efficient, and effective in revenue collection. These bills are set to ensure proper tax administration while making compliance easier to taxpayers. Why the tax reform? Despite being the largest economy in Africa, Nigeria's tax to GDP ratio remains one of the lowest on the continent. In 2023, data from the